today was down again 1.5%. And to me, the declines we have in the market right now, it's more technical than fundamental. There's the story that if foreign investors are taking flight, taking the risk off the table, likely due to the Europe debt crisis and the sort of risk aversion we have globally. And then the second side of the story, really, it's the new rules on margin trading by the CBN, and that's really causing a bit of sell, people exposed to that area. So I see the declines now as more technical than being fundamental, because I think the fundamentals are still quite strong, and this will just present attractive opportunities for people that are serious investors in the market. Also, sort of activity we experience in the market today is still sort of sluggish. The buying momentum is not there, and it's just a whole case of panic and overreaction, which is not really new in the Nigerian market. A lot of investors have seen the recent declines, and they just quickly want to, get out of the market as well. So that bandwagon effect is just, again, putting pressure on the market.
All right, Babatunde, talk to us about what it's going to take to restore some level of confidence into the market, because we know a lot has been said about liquidity issues that have risen due to the credit drying up as a result of the banking reforms. The government is taking very decisive steps along with the CBN to establish the asset management company. Are they moving quickly enough? What's the market expecting?
Well, I think liquidity in the market is still quite sufficient anyway. Just looking at the interbank rate, core rate still about 1.3%, still shows that the interbank market and there's really no liquidity issue in the banking sector right now. For me, I think the main issue that would trigger a market rebound is the upcoming asset management company, because that would basically just tell investors that there is a resolution framework that's going to work, that's going to just put an end to the banking crisis that started last year. And I think once the banking sector picks up, which accounts for almost half of the market capitalization on the index, you see that spill over to other sectors, and other followed suit as a result of that.
Babatunde, because banks are generally trading lower, which are the most attractive of the banking stocks under these conditions?
Well, right now, I'll be buying Access Bank, currently trading at about 8 naira right now, and I see Access Bank fair value at close to 11 naira, really. I think that's one bank that has been seriously discounted. It's trading below its book value right now, and I think it's justified. It's trading slightly above its book value, based on its prospect, based on its position in the industry. Another bank that I will favor right now is the Diamond Bank. I also like Fidelity and Zenith as well. These are basically valuation plays for me, really, and I think these are one of the people that will benefit from, benefit from the recent resolution crisis that the CBN is putting in place.
Okay, talking about the CBN, the governor has also been quite vocal about issues of a fuel subsidy. Within the proposed petroleum industry bill reforms, there are calls to remove that fuel subsidy and conserve cash for the fiscus. How is the market reacting to the probability of a fuel subsidy being removed, and how will that impact on petroleum stocks, if at all?
Well, I think the first thing is that I'm a supporter of deregulation of the petroleum marketing sector. It's not a populist agenda. It's not something a lot of people like, but it's just good for the long-run competitiveness of the oil sector, and just for the viability of that sector, really. For the general market, I think it's going to put a lot of pressure, because cost of doing business for a lot of companies that depend on using petrol and other regulated products for the business, will obviously impact negatively on them. But for the petroleum marketing sector, as you said, I think it's just going to be a wonderful time for them, really, because basically what's going to happen is that the price cap that the government has put on the price of the petroleum on other regulated products is going to be removed, and they can sell at market prices, at competitive prices. So you see, I expect margins to improve to a level that will justify the sort of investment they have in the sector. And all this issue around the petroleum subsidy fund not being paid, and a lot of petroleum marketers incurring huge finance costs relating to that, would disappear. So I think that's positive for the petroleum marketing sector, and also for the long run competitiveness of Nigeria.